Dear students, welcome to Professor ALLAN'S Academy, to be the best and lead the rest. Today's session is to give you an insight on Paper 1, Principles and Practices of Accountancy, held for the CA Foundation course. This particular paper is of 100 marks and is subjective. It has 6 questions. Question number 1 is compulsory and you have a choice from question 2 to question 6. Please remember the weightage is more for the topics of partnership accounts and final accounts. And the remaining topics which are there have a weightage of around 5 to 8%, whereas partnership accounts and final accounts have a weightage of 20 to 25%. When you are solving this particular paper, it is important that you understand and keep to the formats as is required under the prevailing standards, and understanding the concepts and conventions that are followed when you are preparing solutions to the same. I wish you all the best. We now move on to question number 3A. This particular question is from the topic not-for-profit organization, and the marks for this particular question is 12. Now, when you are solving a problem on not-for-profit organization, you are given the receipt and payment account and the additional information. If you notice in this particular problem, they have given us the figures in thousands, but one of the adjustments is given actual as 3 lakhs, which when converted to 1000 will be 300 while recording. Now, what are the accounts that we are required to prepare? They tell us that we are required to prepare the income and expenditure account and the balance sheet for the period ending 31st March 2025. But dear students, you need to know that we will also be required to prepare the opening balance sheet in order to find out the capital fund. We now move on to the solution. We prepare the income expenditure account, the closing balance sheet, and the opening balance sheet. I said the opening balance sheet is required in order to find out the capital fund. Now we first take up the receipts and payment account. The receipts side, you are having the first item, cash in hand. This is the opening balance. So it will appear in the opening balance sheet, cash in hand 150, then bank balances, deposits 3345, current account 900. Then we come on to bank interest. Bank interest is an income 45, donations and subscription is an income, receipts from teas is an income, contribution to fairs is an income, sale of equipment. In the additional information, they have not mentioned what was the cost of this equipment sold. Therefore, it is assumed at no profit, no loss, and therefore will be reduced in the balance sheet from machinery and equipment. Then we are having net proceeds of variety entertainment. This is an income 1170. Then donations for forthcoming tournament. Because they use the word forthcoming, it means it is not for the present financial year. Therefore, this will be recorded on the liability side as donations for forthcoming tournament 1500. Now we move on to the payment side. The groundman's fees, that is an expenditure 1125. Moving machine, this is an asset, that is 2250. Ground rent expense 375, cost of teas 375, fares 600, printing and office expenses 420, repairs to equipment 750, honorarium to secretary and treasurer 600. Then the closing balances that they have given us will come in the closing balance sheet, that is balance, bank balance, deposits 4635, current account 225, cash in hand 375. Now coming to the additional information. They have given us that subscription due on the 1st of April 24 was 225. So that means it was an income that was receivable last year and we have received it in the current year. So you will find that the working for the same has been done here. Last year's will be subtracted and the amount that is receivable for the current year 150. So the net effect of donations stand at 3825. Same way for printing. Now printing is an expense. So last year's outstanding will be subtracted, current year's will be added. So net effect 390. Remember to give the second effect of it on the liability side of the balance sheet. Same way, checks unpresented being payment for repairs. So again we go to repairs. When we go to repairs, last year's payment now made 450, current year's payment which is still outstanding 390. Give the effect of this in the opening balance sheet, that is of last year, and current year in the closing balance sheet. Estimated value of machinery and equipment. In the opening balance sheet 1200 and in the closing balance sheet it is 2625. But if you look at machinery account, additions were 2250, sale was 120. But they are saying on the closing date the value of the machinery is 2625. Therefore the difference between the two will be recorded as depreciation and shown on the expenditure side. To depreciation on machinery 705. Then interest not entered in the passbook. So it means that this particular interest was receivable 30. So your total interest for the year 75. Second effect of the receivable of interest receivable will come in the closing balance sheet as 30. Then bonus to groundsman outstanding. So you have to make a payment, it's outstanding. So current year's outstanding 450. So your groundsman's fees comes to 1575. Second effect of bonus due to groundsman will come on the liability side, that is 450. And now coming to the final adjustments that are there. They are saying that the honorarium to the secretary and the treasurer should be increased by a total of rupees 3 lakhs. As I mentioned earlier, that this 3 lakhs you'll have to convert it into 1000, so it will be 300. So the honorarium of the secretary and treasurer will increase by 300. They are saying by a total of 300 it has to increase, the increase portion. So total will come to 900. Second effect, it is outstanding for the current year, therefore will appear on the liabilities side. Now after we have worked this out, we close the income and expenditure account and we get a surplus of 60. This will be added to the capital fund. But how do we get the capital fund? The opening balance sheet, when we have prepared it, the balancing figure in the opening balance sheet will give us the capital fund balance. So the opening capital fund balance that we have found is 5,220. This will appear here, 5,220. The surplus for the current year 60. So our total capital fund is 5,280. We close the balance sheet and it tallies at 8040.